Hello guys, good morning. Sorry for the call. So basically, today we are going to be discussing about the gold market or the gold market. Yeah. So this is the monthly chart. Um, we've had gold shooting to the upside all through this year. Yeah, all through this year we've had gold shooting to the upside. So but it's fine. Since we can easily pick out if we can pick this level of resistance, which gold broke to the upside. We have also this level of resistance, which gold also broke to the upside. So all the way we'll be having rallies to the upside, buys, buys, buys. Then we have also this level of this high, which we would mark and watch how price would react towards after. So let's go to the weekly time frame. Now on the weekly time frame, one thing we can easily see is we saw that price made a retracement to the downside, or what some persons would consider as a drop, and currently it's making its rally to the upside. Going down to the daily time frame, we are going to be able to pick more information on charts, which is we have this area here, this red candlestick. This red candlestick basically is where this price reacted from. You can see it here. It's where the price reacted from. And it is something very, very important in the sense that you're having a high, which is this place, and price reacted from this particular zone. I just marked the top, basically this whole candle, and all the way from this point, it's been pushing to the upside, pushing to the upside. So let's look at the possible entries one would have taken and what one should be looking at doing on this particular market. So right from when price got to this level, it's made a rally to the upside, a drop, and also a continuational rally to the upside. What can we see? What can we see? We will easily be able to mark these two levels, which is this low, or what we call a floor, this floor. So ideally, whenever price gets into any of this level, you can now begin to plot your zone. There's also a level at the smaller time frame, which is this one. We would also mark that out. So when price gets into any of these levels, you begin to look out for your level to take a possible entry. So let's go down to the smaller time frame and see what price actually do. Yeah. So one thing we can see here is this price did what? It broke into this level. It broke into this level and made a retracement after tapping here, which was an entry. Now this entry is basically for those who were available at that particular time. So we had this area here. It got broken. Okay. So we had this area here. Price tapped into this zone. Price tapped into this zone. Okay. We had price move up to this side. It didn't tap into our zone and it made a retracement and continued. We wouldn't have taken this trade, but then we went to close here. We began inside this level. We began to look for an entry. So it continued all the way to the upside and made a good retracement into this point. Now this is where our entry is. One thing is you would easily just mark the whole of this candlestick for your zone when you are looking for where to put your stop loss. Your stop loss will basically be at this bottom. So let's get that done. Now this is 1 hour time frame. So entry here, stop loss at the low of this other block candlestick here. So if you want to maybe shrink your analysis to smaller time frame, you just have to go to the smaller time frame to pick your entry. Now this is going to be the take profit. So this basically is the take profit for this particular trade, and played out nicely. Still reacting with the whole level thing. One thing I easily saw was I could either drag this, you get, and when we drag it through this same price level where price reacted from a broke structure, you will see that price did what it did its thing and dropped into the same zone. What do we do? That is another entry. So I believe this I'm just by this I'm giving you a little bit of lecture before we get to the main analysis of the day. So price did that, got into this level, and you can see price ATP. Now I always encourage and advise one thing, which is whenever you're taking an entry, and all my students know this, whenever you're taking an entry, make sure you are taking profit at the high which created that reaction you entered from. All these other moves doesn't really concern us. It doesn't really concern us. Why? Because our target is to take our entry and take profit at the high which created that move. If once price passes this point and you are still holding, now that is your own risk. You understand? That is your own risk now. You may maybe be saying certain things, that is your own risk. Or you are taking your trade off of the higher time frame. But I do more of analyzing what's going on the higher time frame and taking entries on the smaller time frame in order to just be safe with one's entry. So that's that. Now, after we got price hitting this, closing into this point, another thing we saw clearly was this level of resistance. So we mark it out and we want to see how price will react from it. So having marked this zone out, you have to look for your other block. Now, it's the other block wasn't really clear on the smaller time frame. So we have this zone here. This is our level of this zone is where we can plot our other block. Now the stop loss is large. Some persons will just come and use this smaller order block here. So you just have to know how to refine your entry and decide what you are willing to risk. So this smaller order block here, though the stop loss wasn't hit, but then it was a risky entry. Why some persons will use the bigger order block, which is the whole of this zone from here to this point. So I would prefer to use this one because this one I'll feel safer with this particular bigger zone. But I would also bear in mind that this level is somewhere I would not want price to violate. So let's look at the higher time frame. So on the higher time frame, you can see it clearly. Uh, this particular zone which I'll be using, this particular other block which I'll be using, I would simply just put my stop loss at this point. So that way it's safer for me. That is me refining it. Then I will discard this bigger zone. So what will I be doing? My entries will be here. The moment price gets into that zone, and my stop loss will be here. And then we would simply be targeting the high which created that drop. As I've always said, we'll be targeting this high. So basically, this was a nice trade. It also gave an opportunity for a re-entry, but I've already explained that the re-entry it gave an opportunity for was price breaking into this high and coming back to respect this level. And this was an entry if you wanted to take an a re-entry. And then to look carefully, you would find out that there was another block here which price reacted from. You would have been able to take your entry from this point. Just know how to refine it and you'll be fine. So that is that. That is that. for gold again. And after that, we had price hit this point. Now we've been on our way to this high. Something we easily saw here was price taking out this point and it came back to this level here. It came back to this break of structure, this point. So it came back to this point. Let's see. So it came back to this point, respected also the other block and pushed to the upside, which is respected this point. Now, if I'm taking trade off here, I always will use my wick, my stop loss here, and that'll be it. So if I'm taking this trade, I know for sure, I know for sure that I'll be targeting this point, which is my TP here. I know for sure I'll be targeting this point, which is my TP, and this area, which is my stop loss. So yeah, that's it. So that will be that for this trade. That will be that for this trade. Mm, yeah. So now coming down to look at this particular trade, it's one thing that's very, very straightforward. What do we see? Same thing I always said. You mark out this resistance point. So after marking out your resistance point, you are basically looking at taking your trade with this zone. You understand? With this zone. Now that was the reason for this first trade, targeting price to swipe this high, but this high wasn't swiped, wasn't played. So what will you be doing? Looking at this area basically, you can find price expected here and rally to the upside, hitting CP, and that was it. And then we have the next one, which is price expecting this point and hitting CP also here. So this would be your CP. This would be your entry, targeting this place. But then the thing with this trade was so the thing with this trade is price didn't really hit this CP. So either you are manually exited or price will come back down and you are still in the trade. So that is that for this particular one. Now entry again here, CP, CP here. So basically we have this one. This is it. So generally we are still expecting price to break out this point and maybe give another possible retracement, take an entry and targeting this high. But at the moment we have price moving from here to this point. So for an entry, I would say this level still remains a good level to look out for, and there's another level which is being created. There's another level which is being created, but let's allow this price to break above, and then we can see what possible entry we can get from the market. But at the moment, we are looking out for buys from this point to this point. Price has already gone more than 80%. Let's allow it to TP. Don't re-enter or don't enter any trade. Just allow price to run, and let's see how it all goes from there. You have a wonderful day, guys. I hope this is helpful. I hope this information is helpful to you all in terms of how to look at the market clearer. Peace, guys. One love.